I'm Brett Sheedy. I'm a CPA and tax attorney with Strategic Tax and Accounting. Welcome to our knowledge sharing videos. In these videos, we'll cover some of our most commonly asked questions about how to reduce taxes, business law, and business consulting.
In this video, we're going to look at self-employed income. Self-employed individuals, according to the IRS, includes anyone who's paid $400 or more for providing a good or a service. That's true even if you don't get a 1099 and even if you're only paid in cash. Now, in reality, this kind of income that is very small and there's no 1099 issued is rarely reported. However, you should have a tax preparer that you trust to let you know whether you should report it to your benefit. So even though there may not be a big paper trail and you didn't get a 1099, sometimes by including this income, people can increase their earned income credit. Or sometimes if they put a bunch of expenses they had to incur, particularly early in a new business, it may create a loss that gets you a refund of other income that you or your spouse had on a W-2 with withholding. So don't assume that it's better to not report income because there's not a 1099 or other paper trail. It may actually be to your benefit in some instances to put that income on your tax return. But for those who do get a 1099, what is a 1099? Well, there are several kinds of 1099s, 1099 NEC, 1099 miscellaneous, 1099K. There's others, as you may know, for interest, dividends, things like this, but the self-employed ones are those 1099 NECs, miscellaneous, or 1099K. A 1099 NEC or miscellaneous will come straight from the person who paid you. This may be insurance salesmen, real estate agents. It could just be for contracting work. Generally, if it's a business that's paying you, they're going to issue a 1099 NEC or miscellaneous to you. A 1099K is more for small business owners who sell things or collect payments electronically straight from customers or clients. So those will be processed by someone like Square, Venmo, PayPal. They're going to send you what's called a 1099K that shows the total amount they collected from people on your behalf and transferred to you. So it's important to recognize that a 1099 is an official form with the IRS that's filed with a sister form called a 1096. And then the 1096 shows the total of all the 1099s that person or business issued for the year. So the government already has a copy of what was given to you, and they're waiting to see it on your tax return. So you can't disregard a 1099. If you get one that was legitimately filed by somebody who filed a 1096 and a 1099 for you, you're going to have to put it on your tax return. So what do you do with those 1099s on your tax return? If you receive it, you should give a copy of it to your tax preparer, or you should put it in your tax software when it keys you to about 1099 income. And you have to provide at least a total of all the 1099s as your total income from those activities. Meaning if the IRS totals up your 1099s and they're looking for then that total number, if the income you say you got from that activity as total revenue is less than what they have, they're going to send you a letter asking for an explanation, or even just a letter increasing your tax based on the total income they had for 1099 income. So if you have 1099s and you have to put it on your tax return, how do you decrease your tax on this self-employed income? Well, it's important to keep records of everything you spent to earn that income. So you're going to keep a record by using maybe a credit card or a bank account for that activity. But what can you offset? The deductions are basically in two categories. Ones that you spent by debit, credit card, or cash or check to enable you to do that business, whether it be supplies or some kind of software, a computer. What did you have to buy and able to do this business? The other category is things that you already have, like your cell phone, your internet bill, your mileage on your car, your home office. These things aren't going to be spent directly out of an account or by a card or anything. They're things you already have, but you're going to use in the business. So some percentage of those costs will be put on your tax return. Your tax return software or tax preparer should be able to help you determine what's the appropriate percentage of those bills. You can also see further about this on our self-employed record keeping and summarizing video topic. I hope this video was helpful and that you have some others you can view that will add to your understanding of being a self-employed person and keeping records and decreasing your taxes from that income.